So I got a call from somebody the other day who was calling regarding one of our listings, and they were looking to potentially rent for a while before they buy. And this is the probably the fourth call like this I've had recently where people are renting because they think the market's going to crater in 2021. So they think all of the coronavirus stuff, pandemic stuff, and they're listening to a lot of the media, which is dangerous without data, is listening to people talk about mass influx of foreclosures next year, massive rampant short sales, people homeless because of it. And while that may be true at the end of the day, I'm not sure, because my first question was, were you buying your crystal ball? Because I'd like to get maybe one of those too, if it's that accurate. But I'm data driven, so I look at the data, I look at the forecasts, I look at the laws and ordinances in my particular state and local government to see what's going to help soften the blow. And I kind of come to this conclusion: whether the housing apocalypse happens next year or not, there's a few things to think about. Okay, one is on the data driven, is that are people going to be losing their homes? Are they going to be foreclosed on? Are they going to have to walk away in the near future next year? Likely yes. Okay, people have had struggled over the last 5 months. It'll probably go on for the rest of this year in some aspects. But one thing that the government is trying to do to solve that is to soften the blow of foreclosures and walkaways and deeds in lieu and that kind of thing. And that is with a lot of foreclosure moratoriums on banks, which are still in effect in California, likely to be extended. That will slowly soften the blow, encouraging lender workouts with borrowers. And while you would agree or disagree politically on some of the stuff that's irrelevant, but it's just data, that's going to help kind of ease it back down a little bit. Another thing is that the interest rates are now below 3%. It's essentially free money. So there is still a high demand in the market for buyers to buy that stuff. So there won't be this foreclosure onslaught of property supply on the market too long, because there are going to be buyers for it who are just sitting there waiting for those properties to become available. Because right now inventory is way reduced. I mean, it is less than a third of what it should be in a regular stable market, and that's creating this kind of artificial demand to a certain degree. So once that supply starts going up, even if it's foreclosed properties or bank-owned properties at the end of the day, that foreclosed and bank-owned properties is going to be subdued by local ordinances that are going to, that are trying to ban foreclosures for a certain time period, or at least restrict them. And second, it's because there's going to be buyers for them, because there's a ton of buyers right now waiting to buy something when it comes on market, because right now inventory is so low. They got nothing to buy. So they're renting. I mean, we're doing renting to people that are usually home buyers, because they're waiting for homes to come up. Third is that if there are foreclosures and short sales that start easing into the market, because right now it's almost zero, almost donut on the market right now, but if it does happen, and it will happen, there's going to be a little bit of an increase. Investors are sitting on the sideline, our investors, myself and my partner, sitting and waiting for some of that to happen and come on. Those are going to get snapped up like that, depending on if they're over or under market. So there's a lot of things that are working for and against the housing market, and I think it's not going to be an onslaught. There might be a slight correction, but I'm talking 3, maybe 5% type regular market correction at best, if any. But interest rates being so low, it's probably going to offset most of that. So my forecast, my crystal ball, based on some of the data and forecasting that I see all the time and follow, is that we're not going to see a massive correction next year or the year after that. I think there's going to be a slow increase in supply, which is going to kind of stabilize things a little bit for the benefit of everybody. Because stable markets are great to buy and sell in. Erratic markets, it's like you're playing, cryptocurrency. All right, little insight today on the Real Estate Minute Show, and we'll see you next week. Take care. Have a good week.